All right. Welcome, everyone. Welcome, welcome, welcome. Welcome back to Trader Hotline. How we doing? And the crowd goes wild. What's up, everyone? Ace, Fi Guy, Zamora, Chef. How's it going, man? Welcome back, John. Welcome back, Dave. How's everyone doing tonight? Let's see here. All right. I think we're all set up. Let's make sure we're all ready to go here. All right. I think so. What's up, guys? First time on Trader Hotline? What's up, Dylan? Are we bullish? Oh, it just started raining outside, actually. Wow. Maybe that's bearish. Matt Owens, what's up, man? We're the lines. We're searching for your call, Matt. I gave a heads up. How's it going, everyone? Welcome, welcome, welcome. Why is this not showing up? Always something, man. Always something. We got that one showing up. Make sure to call in 239-372-9990. You like that ticker across the bottom? Your journal, non-existent. Discipline, required. Meme stocks, put it down. Your P&L blowing up. Revenge trades, stop it. Make sure I'm recording. Welcome to Trader Hotline. This episode of Trader Hotline is actually sponsored by yours truly, Insiders Coffee Co. Insiders Coffee Co. is built for traders who take the pre-market as seriously as the open. Premium blends crafted to keep you locked in when it matters the most. Your edge starts before the bell. If you're interested in gaining early access to Insiders Coffee Co., go to insiderscoffeeco.com or go to the link in the description below. Appreciate it, Insiders Coffee Co., for sponsoring today's episode of Trader Hotline. Man, I love saying that. Good call on STX today? Yeah, it was a good one, but it went straight up. So unfortunately, there was really not an entry point. That was the downside of it. Didn't really see an entry point on that one today. Let's make that a little bit smaller. That's good there. Wifey's watching. Where's Beans at? The beans are back there. All right. Make sure to press that like button as you come in. Nick, I say we start it up. I know we got a few calls coming through. Nick, let me know what you're gonna go with first here. Meta and Circle. Yeah, Meta was good. It was okay. It's okay. There was better ones. But we got out alive. We'll take that dub. Medina's Pro Wash Solutions. What's up? Love it. Welcome everyone. Thanks for coming again. Nick's curating the calls on the other line. In the meantime, we can do a little bit of a market review today. Let me go ahead and today I probably should adjust that a little bit. Hold on. Today, NASDAQ right into our level that we discussed in the pre-market. If you guys come to our pre-market live stream, right into that NASDAQ 200 SMA. Rejecting that same exact Friday high. That was a really nice call today. S&P 500 right into that same supply level as well. That Friday high really was the key. Wow, what happened to Circle? I am ready. Let me go back. Hold on. So it's why do key levels change throughout the week, right? Throughout the week. All right, let's push that live. All right, bring them in. I'm ready. All right, so we got Duke calling in here, and he's wondering why sometimes we have some levels that change throughout the week. And I thought that was a pretty good question because it could get confusing to some people as to why things change. And so we're going to bring Duke on. Can you hear me? Hey, Duke. Yeah, 1 second. Let me make sure everyone can hear your desktop audio. Give me one moment here, Duke. Let me just make sure that you're...
Gotcha.
Go ahead. Okay, I think we're good. We're all good to go.
You can hear me okay?
Sure can. How can I help you today, sir?
Oh, Desi, thank you so much for taking my call, man.
You got it.
All right, listen. My question, okay, hold on. Before, I never thought I would get to speak to you. Before I even ask my question, I just want to tell you, Desi, what you're doing, man, it's a great service, and it's changing people's lives.
I appreciate that, Duke.
I'm
That's very
calling.
kind of you.
I'm calling you from New York.
Okay, yeah, it's my
And
hometown.
okay, and I guarantee you, I'm probably one of your oldest followers or viewers or subscribers or whatever it is.
Uh-huh.
And
That's awesome.
I just appreciate what you do, man. So just know that you have an audience out there that's probably much broader than you think.
You know, the funny thing, Duke, is that my audience is actually older than most people would assume because we attract a much more mature audience just from the way that I carry myself. So it's good to hear, and I like dealing with the older people because it's just a good conversation. It's level-headed and much more mature, which is definitely, these are the types of conversations that I enjoy. So,
You know, Desi, it's funny that you say that because, and I'm not trying to hype you up or nothing like that, but when you get into this whole rabbit hole of YouTube and trading and all of that, there are so many people out there.
Yep.
Especially the younger generation who got into trading after the pandemic.
Yep.
And when I finally came across your channel, which I guess would be about a year ago maybe,
Okay.
you just came off. I could tell you were a young guy, and you just came off with a whole different kind of energy, man. And I couldn't stop watching, and I've learned so much from watching you. Okay, enough of that. Let's get to the question.
Appreciate that, man.
Okay, Des, I tune in the morning at the 8 o'clock session to try to get the levels.
Yep.
But I notice a lot of times you change the levels.
Yep.
And I'm it throws me off a little bit because I'm thinking to myself, okay, I can understand if a key level expands, right? But sometimes you completely take the level off your chart.
Yep.
It could be from a Monday to a Tuesday, and you've already changed your levels. And I'm thinking, why doesn't prior price action stay the same? So why would that line be deleted?
It's a fantastic question, and there's a few parts of it. So the first one, just fully transparent, there's definitely moments where I put a level on the chart and I realize it's not that great. So that is definitely part of it, right? Like I'll analyze something on a Monday and then I'll look back at it on a Tuesday. I'll take more time to reassess it throughout the week, and decisions sometimes change. So that's part of it, right? Sometimes it's just simply that level was just not something that I'm no longer interested in that spot. So that
meaning that it's not a strong price.
Maybe it's something that I thought was strong on a Monday. Maybe I was a little bit like, this is all, I'm just being, as you know who I am, Duke. I'm a very transparent individual, so I'm going to give it to you straight, right? So let's say on a Monday I'm a little bit rushed, right? And I'm getting ready for the pre-market live stream. And then when it's Monday afternoon, Tuesday night, I'm sort of relaxed and finding more time to look at things. Then I look at that level, I'm like, is this perfect? Should I be adjusting this slightly? Right? That definitely happens. So just know that, right?
I got you.
Yeah.
I got you.
So, but there's more to it than that. But that definitely is a part of it. Number two is intraday price action definitely plays a role. And you said it perfectly. Now, there should never be a situation where previous price action is no longer important. I don't think you would say that. But how I judge my levels, or how I put levels on my chart, is something that it's a different way of thinking. So bear with me here. When I think of a level, it is the level that I actually want to trade off of, right? Does that mean that there are other levels on the market? 100%, right? So the levels that I have on my actual chart that I share with you in the morning, are actually spots that I think create interesting trades. Now, that doesn't mean that there's other levels on the market that are important, right? That could direct price action, but is that a spot that I am, actually interested in trading off of? So when I create that level, I also think through my head, okay, let's say, for example, I have, right, let's just pull up the charts. Let's say I have an example. Let's say I can put a level here at the, let's say right here. This is a great example, right? See this low here from Friday? Right there,
Okay.
right? So that's a level, right? Duke, I mean, that is a level. That is a Friday low. That's, good spot. Absolutely a level to be paying attention to, right? But when I look at that level and I look at some of this price action that happened on this Friday, and also I see that it's in the middle of this sort of channel here, that is just no longer a level that maybe, and this is just one example, but there are sometimes levels that I say, okay, that is a valid level, but do I actually have interest in trading off of it? And if I answer in my head, if that answer, whatever that situation is no, all right, yes, this is a potential spot, but I don't have interest in actually executing a trade off of it, then I will delete it, right? Because the reason I do this is because when I trade intraday, I am putting 100% trust in the levels on my chart. So that means, what I mean by that is, if I'm going to execute a trade, I'm not re-looking and analyzing intraday, right? I have to act quick. And so I am blindly trusting what I set up in the pre-market. So the levels that I put on my charts are spots that I trust that I can create a trade plan off of. I hope you can understand the difference there.
Without hesitation. I understand
correct.
now.
So there are levels that will always be remaining, active, and they are correct to keep on your charts. But not every level, to me, is trade worthy, right? So there's the difference there. So I actually want to keep levels on my charts that actually are spots that I want to execute a trade off of. If I don't have a thesis to trade off that level, I will delete it off my charts. And the reason for that is because I don't want to be faked into, or I don't want to be influenced on the intraday to trade off of it, because I'm blindly trusting these levels. Like, if I say, hey, the market's moving into some red zone that I have, I'm going to instantly start thinking about if that is a rejection point. I'm not going to go back and redo my analysis as the market's trading, right? I'm like, okay, red zone means potential rejection in my mind. So I don't want to have spots on my chart where it says, hey, red zone means rejection, but then it's not really an interesting spot to trade off of, and then that's typically what can lead to some losses or maybe some incorrect trades. So throughout the week, to sort of answer your question in a summary, throughout the week, I not only judge levels on the individual equities, I also judge, is this a trading opportunity? And if both of those things are a yes, then that level stays on my chart. But there are definitely times where I'll say, hey, this is a level, this is a potential spot, but I don't have interest in trading off of it, and I'm going to delete it off my charts. Another example of that might be like today on the SPY. I didn't want to trade any shorts today. Now, the reason I didn't like any shorts today is because we were trading off of the... wrong one. The reason I didn't have any interest in shorts today is because I knew that the QQQ was bouncing off the 200 SMA in the overnight session. So I said, hey, I'm not really interested in shorting back into that 200. I think you're actually seeing some strong buying off that level. So I'm going to go ahead and delete any minor supply level that I would potentially be faked into shorting. So for example, let's use this. This will be our final example here, Duke. Once again, see this low right here at 598.54 right there. I didn't want to have a rejection point here on my chart. Now, while that is a valid rejection point that you would say, hey, if you move up back into these lows, you could reject, right? The reason I said, hey, take that off my charts today is because I wasn't interested in looking for a short that close to Thursday's lows, and I wasn't interested in looking for a short that close to the 200 SMA. Now, if I would have had a red rejection zone here, I may have been looking at my short-term time frames today, and I may have been looking to potentially short that, and that would have been incorrect, right? So I am not. So moral of the story here is levels adjust. They adjust every day for me. I mean, sometimes zones expand, like you said. That you can understand, like you said, and I think that's a great way to put it. Sometimes zones expand because, like, for example, let's bring up the charts again. Another great example on the charts. You have Friday's high here, right? So, and then look at today's high. So what would you do? You'd expand that zone, right, to sort of encompass that today's high. So that's totally understandable. But when when levels completely differ is when I no longer am interested in the trade off that spot. Does that make sense?
It's funny because I kind of thought that was going to be the answer. You're basically every morning you're preparing yourself for that day's trading, and so
absolutely
you want the levels on your chart
that I'm interested in trading on that day.
Yeah, not have a question mark on them because you can't hesitate. I understand.
You couldn't have understood it better, Duke. That's absolutely another thing. I'll add one more thing before we move on. I had a call with some members, and we had some people looking at levels down at like the low 500s on the QQQ. That's like 12-15% from current levels, right? These are levels that I'm not even interested in looking at because I know by the time we get to that point, a lot of things are going to change. So my focus is maybe 2% to the upside and 2% to the downside, right? So that range of where I think we can move on an intraday basis, and I'm going to just focus on that tighter area and really lock in on that because every day we're re-looking at this. So we don't really need to game plan for a level that's 20% to the downside, right? That doesn't have to be in our charts. We're going to have plenty of time to adapt and react to those spots. So
right.
Every day.
I always remove those things from the chart.
Yep. All right, Duke. Yeah. Well, I hope that answered your question today, man.
Yo, Desi, thank you, man. And again, you the best on this, man. Don't change what you're doing, brother. We love you, man. We love you to death. You representing New York to the fullest.
I appreciate that, man. Have a great rest of your night.
You too, man. Great trading tomorrow.
See ya.
Bye-bye now.
Bye. Great call, man. Duke from New York. That's great. I love it. Yeah, great question by Duke there. Levels do change, and it can get confusing as to why, every day some things are sort of adjusted. And, there's definitely two parts to it. One, I make mistakes. I find spots that I no longer am interested in. I find spots that I want to adjust. But then at the same time, one of the biggest things that I try to make people remember is levels on the charts are where you plan to trade off of. That's where you are planning to execute. And so tailor your levels on your chart to spots that you actually have a good thesis on, right? Like where you would be comfortable in trading. There's plenty of levels. There's levels all over the place, all right? There's key spots everywhere. Is it actually a spot you're interested in trading off of? If it's not, just get rid of it, right? So that you learn to only execute at key inflection points that you created, right? Don't put spots on your chart that you are not confident to trade off of, because then you're going to be influenced by every single spot on the chart. Oh, red zone. Maybe I should look to short. Oh, green zone. Oh, another green zone, right? I'm going to keep trying to take trades. If you can memorize, or if you can create a mindset where if there's no level, I don't trade, right? Put it in caveman. No level, no trade, right? Like make it super simple. If I'm not at a key spot that I have charted before, I'm not taking a trade. And so only put spots in your chart that actually warrant a trade entry. That's something that's really important, and I would very much focus on in your trading. All right. hopefully that was a good conversation there for you guys on key levels and how to set up your trades. Duke gets a bag of coffee. Duke probably will get a bag of coffee, actually, after that call. There are levels to the levels. That's right. That's right. All right. I'm sure Nick's, Nick, you got any, what's next, Nick? I'm sure Nick's got another one lined up here soon. Make sure to call in 239-372-9990.
Hey, I got Matt.
All right. Let's do it.
You ready?
Yeah, we can just bring him in.
No idea what the question is. He didn't leave one. He just said, hey, it's Matt. So here we go.
All right. All right. Hello.
Hey, what's up, Vince? It's Matt Owen.
Matt Owen. How's it going, man? Welcome to Trader Hotline.
Well, that's good. Thank you.
What
So
do we got today?
I got a question. Yeah, I got
All
a
right.
question, and we'll spitball it and see what you think about it, right?
All right.
So I trade primarily reversals, right, as you may know. And I think you trade something similar maybe with the reclaim rippers.
Yep.
And, I primarily trade ES futures and NASDAQ, but primarily ES. And something that I've been struggling with lately has just been a trade management thing. And I'm wondering if you've gone through something similar and how you adjusted. And I'll tell you some of the things that I'm thinking about doing to adjust and what your thoughts are on it.
Okay, so what are the things that you're struggling with?
So something that's been going on a lot is, one, obviously the very sideways markets, right?
Yep.
Very choppy markets. And I've found that, typically my trade management process is once a trade has moved sufficiently in my direction, once I'm up more than 2R, I generally look to move my risk to break even.
Mm-hmm.
However, in the recent conditions, a significant amount of the time, I'm had more break-even trades than wins or losses, right? So a significant number of my trades, especially trades that were green.
Yep.
And so I'm stuck in between where it seems like the trades that I get really persistent on, and it's like I'm holding this thing full stop or full target. It seems to always go full stop. But the trades that I get any kind of fear on, and I'm like, oh, let me take profit.
Yeah.
Those are the ones that I end up taking profit early, and they go full target.
Yep.
So the things that I'm thinking is, all right, either one, I just commit every trade is full stop or full target, or two, I adjust and start taking some quicker profits and keep my trade management, and that would have a smoother equity curve versus sticking with my usual.
Yep.
Right. So I'm wondering if you've gone through similar things.
Yeah, I already have some great things for you. So, what I wholeheartedly believe, Matt, is that trading is never black and white. So you can never look at a particular trade and then adjust what you are doing or think differently because of that one particular trade, right? Judging what we should do on a trade-by-trade basis is really just a total waste of time. I have seen thousands of examples, and we've gone through hundreds of examples with members in the past where we would say, this trade shouldn't have been a short because you were above VWAP, right? And then the next day, right, I'll try to make that example to members and try to teach people, hey, don't short if you're above VWAP, right? Bam. Now, next day, what happens? Level rejects, it's above VWAP, it goes 500% to the downside, and then that day I'm sitting there like, I should have shorted above VWAP, right? So this tells me, right, that there is just no singular, nothing is the same on a day-to-day basis. It's not something that happens in the market. You can't, this is probably why, let's say, artificial intelligence or bot trading is just not at the level that it should be yet, because random things happen, right? And so what is the only way to take the randomness out of your trading? It is to do the same thing every single time and accept what the end result is. Right? It's the only way. You can try to optimize it till you lie dead. I mean, you can try to optimize it and try to do something different every particular discretionary situation, and it will something always different will happen. Something random will happen that will then make you think about what you should do again. And then you're just on this rotating, never-ending attempt to optimize, right? Because you're always trying to extract the most out of a particular trade. But that trade outcome is always going to be different, right? And so what I would say to you, Matt, and what I have done in my trading is it's the same exit system, and it's the same, for me, it's the same, for options a little bit different. So with futures, maybe you have to build your own sort of first target. But for me, if I get that first pop on my premium, right, it's usually around 15 to 20%. I am taking half off my position. I do it every time. It's not even a question. It's 100% robotic. I get a lot of hate. I get a lot of hate from this, right? You know, the Timmies and Jimmies online, they say, why are you taking off half so early, right? That thing ran 500%. Why would you take that trade off? Next, guess what happens the next day, Matt? I take 20% off, half off, and then that's the highest the option premium goes, and it tanks from that spot, right? And then you get the people that say, you should have sold it all at 20%. Why didn't you sell it all, right? You gave back all your profits. So this tells you that there's just no consistency with how every position is going to run. And so what do I do to offset that uncertainty? I take half off at 20%, no matter what the hell it is, because I know that there is no consistency to what the next move might be. I caught that move. Usually the most consistent part of a trade is the entry, right? Because you know what needs to happen to get your entry point, which I'm sure you know, Matt, what your entry criteria is. And there's probably a lot of times where you get that instant move in your favor, right? Because you read it correctly. Now, from maybe the next 5 minutes from your entry point, pretty predictable, right? You can say, hey, I think there's a clear reason to take a long and a reversal here. And a lot of the times you're going to get the next 5 minutes to be a reversal for you from your experience, from your entry criteria. Now, after that first push in your favor, then it becomes, is that all I'm going to get, right? Or is this thing going to continue? And so what I want to do is take something off the table at that point when it starts to become questionable, and then I will use intraday pivots and intraday levels to see if I can continue to run it. And so what I would recommend, like you said, you were sort of questioning whether you should take it all off or let runners ride, right? Whatever it might be. I'm not going to answer that for you, but what I would tell you is to do the same damn thing on every single trade. And accept that, yes, I could have held this longer, but in the attempt to try to be consistent in your trading, I am going to follow the same sort of scaling out and exit criteria on every position, so that I have a very similar sort of equity curve and a very similar win, very similar losses, and just be consistent in that manner. You're going to have plenty of trades that you're going to wish that you held on to. You're going to have plenty of trades that maybe you wish you got out of earlier. But as long as you're staying consistent with your exits and how you model them and how you structure them, I think you just have to accept that the market is uncertain at sometimes and the market does random things. You can't really adjust for every single situation, right? Does that make sense?
No, for sure. I mean, I'm fully aware of outcome independence, right? But,
yeah, totally. That's
I guess
perfect word.
What I'm thinking is, obviously, from a mathematical standpoint, thinking of 100 trade data set, right? There's going to be probably a substantial majority that hit, 2R targets. There's going to be a lower percentage that hit 3R targets and a lower percentage that hit 4R targets and so on.
Yep.
Right. So I'm trying to optimize a little bit. And what I've noticed in the recent conditions is usually my discretionary trade targets are 3, 4, 5R.
Yep.
But I've noticed a significant amount of my trades are reaching 2R
And then reversing.
where I don't capitalize and they're reversing. So
Yep.
the adjustment that I'm thinking is pretty much exactly what you described, is basically having a fix, take half off 2R, pretty much no questions asked. And then, continue my normal trade management system, and I'm going to maybe realize a little bit lower realized risk versus reward overall in kind of these choppier conditions, but I'm going to have a smoother equity curve and a little bit higher win rate.
I think that is adapting to market conditions. I think that's absolutely the right call. I think maybe if you're taking a quarter off at 2R, maybe you now take a half off, right? And you're sort of, you're realizing more because you know that, the likelihood of this thing not continuing is definitely increased due to market conditions. And as a trader, adapting to conditions will definitely be a thing that needs to be done. I think once you find us in a market trend once again, you can then try to be more aggressive, right? And say, okay, I'm going to go back to my quarter off at 2R, and I'm going to try to reach my 3R, 4R targets. I think it's very smart of you to realize, and I think a lot of people should realize this, that you're not getting those extension targets right now in the market conditions. So is it smarter to try to realize more gains? I think temporarily it is. Now, I think as long as you can, I think the caveat here, Matt, is that someone needs to be smart enough and good enough to know when to adapt those rules. And obviously, I think you are. And most traders, good traders are. So I think that's a great idea. That's what I've done. I have, how I've been different this March is instead of taking multiple trades, because I definitely look for usually more than one trade per day. That's, sort of my MO is not just one trade per day in the past, but that worked in trending markets because you would have another opportunity. You would have another stop trending. You would have another intraday mover that was worth catching, right? Now, if you try to trade past 11 o'clock, 12 o'clock, you are basically in, you're in ghost town. It's just disgusting. It's not even worth looking at. So, for me, I have just said, okay, 9:30 to 11 o'clock, I'm taking one trade. If it's green, I know my highest probability right now in these current market conditions is to not try my luck again, right? Because if I go and try my luck again, I know what the outcome is probably going to be. But there are definitely market situations where it's worth sticking around, right? Those all-day trends where you're like, hey, I can stick around till 1 o'clock, and there's probably still some juice out there. But that is another thing that adapting has been, very important. So, yeah, I think that's a great call. I think you take more off, right? You're a little bit more aggressive with taking more off to offset the ranging conditions. I think that makes a lot of sense.
Yeah, I think you, me, and ChatGPT are all on the same page about the data right now.
Yeah,
I think you brought this up, but I didn't even bring that up too. I've noticed as well, like for over a month now, my expectancy outside of like 9:45 to 10:45 is drastically down. So I pretty much don't even look outside of that time frame.
Yeah.
But yeah, it's interesting across different strategies, different ways of executing trades and everything, but still similar management and similar adjustments in these kind of conditions.
I think the management is the hard part. The management has changed a lot. The entry criterias are relatively the same as they usually should be, right? That's your strategy. So strategy shouldn't change. Why you enter a trade should not change. But how you manage that trade has been, I think, one of the hardest parts to adapt to in the market conditions, because you can't think about it as we are in a trending, market expansion move. You just can't. And if you do, you're just going to give back profits on everything. And, the answer,
I agree.
The question is it right to be giving back profits on everything? Probably not, right? That's probably the wrong call. Just change your exit criteria, change your aggressiveness to scale out and take profits and adapt for what's happening, right? Live in the moment rather than, think about this market as a, 2022, 2023, 2024 trending market. So I think that's a good
Yeah.
call, Matt.
I agree. And I think in terms of limiting, I've found the same thing. Typically your first or second trade of the day is going to be your best location, your best analysis. And in these conditions, that's often been near the extremes, and anything after that tends to be in the middle of the range.
Yep.
So
and it just becomes a mess.
I think all of those things are good adjustments in this condition.
Yeah, totally. Well, I appreciate you calling in, man.
Thanks, Vince.
We're
I think this is
definitely
really
getting
cool.
the coffee out to you.
Yeah,
You
I look
excited for
forward
that?
to it, man. I'm gonna need some of that reclean Ripper in my espresso machine.
That's right. I love it. All right, man. Well, you have a great rest of your night.
All right, you too, Vince. Have a good
All
one,
right, bro.
everybody.
See ya.
Bye.
Matt Owen, appreciate you. Another trader online. Worth checking out if you guys trade futures. Order flow trader. Good guy. Just a nice, honest dude. That's who we like to talk to around here. And that's the type of people that I want to surround myself with. So really nice, good conversation from Matt. I think market conditions have definitely warranted some adjustments. I think market conditions have warranted some management changes. They've been hard to adjust to. That's why I probably lost in February, to be quite honest, right? It's adjusting to market conditions is not a day-over-day change. It's going to possibly take some days and some time to feel out, and you're probably going to lose a few times because you're adjusting in real time. So once we can adjust to it and try to make ourselves better because of our losses and learning what the market's doing, then that's when you can start to take advantage of the correct changes. It's the same thing as a football game, guys, right? Like, how many times do you see a team, a NFL football team, be a different animal after halftime, right? Like, they go in, they're getting crushed, they go in halftime, they make the proper adjustments, and they blow out the team in the second half and win the game. I mean, there's no better analogy to that when it comes to trading management and trading adjustments. It's absolutely something that you'll have to deal with throughout your trading career. So, good conversation there. All right. Before we continue, I want to let you guys know, once again, Insiders Coffee Co. Thank you for sponsoring today's episode of Trader Hotline. Insiders Coffee Co. is built for traders who take the pre-market as seriously as the open. Premium blends, crafted to keep you locked in when it matters the most. Your edge starts before the bell. Make sure to check out insiderscoffeeco.com. Coming soon. Mid-April. Very excited for it. All right. 8:40. I think we got time for at least one more call. Nick, what do we got? Make sure to press that like button, guys. Subscribe to Trader Hotline if you are new here. Make sure to help us get to 2,000 subscribers. I think we're pretty close. I think we're getting there. That would be a good goal by end of week. I think we've gotten some good clips tonight, too. That's called managing your position, managing your risk. Everyone should do. Yeah, I agree. Ivy League, totally. All right. How we doing, Nick?
All right, Vin.
Got one?
I think we're gonna bring on John after all, and maybe you can talk to him about his feeling that trading is mundane, and maybe
Okay.
some other people are feeling like that as well.
All right, great. Let's do it.
All right.
Right now, John. Hello again, John.
Hey, Vince. How's it going, bro?
Good. How are you, sir?
Oh, alrighty.
What do we got?
I've been trading about a year and a half, and
Okay.
the psychology thing is much bigger than I ever thought it was going to be.
Oh
You
yeah.
know, you see these
Welcome to
guys
trading.
online. They're like, you do this, you do that, you're going to be a millionaire in 3 weeks. You know, so it's not that way. I get it now, but
No.
After being with you for at least 6 months now, learned a lot, and where I'm at now is sort of a break-even kind of thing.
Okay.
Sorry, I'm getting echo. Let me turn you down. All right. So my losses are not near as big as they used to be.
Okay.
And my gains are steady, slow, you know, nothing exciting.
Mm-hmm.
But I can see progress. But here's where I'm at. And you answered a lot of this question with last caller, with the market the way it is.
Mm-hmm.
So what's going on with me is it's just that excitement about trading every day is just not there anymore. And I don't know if that's a good thing or a bad thing. I just kind of wanted to see if you've been through that kind of thing, if other guys have been through that, if it changes, if this is the way it's going to be. Because I'm not going to give up on trading. I know that's a way out.
Yep.
But I just kind of wanted to see what you thought about that.
Yeah. So there's two parts to this, right, John? Number one is it's not exciting, and sometimes the dollar amounts don't give us the dopamine and excitement that we're looking for, right? So that's one part of it. Or, you know, some people just they're trading amounts of money that they just don't really get excited about, whether it's a win or a loss. Now, that is the right thing to be doing, okay? So that side of it, where wins and losses should not evoke emotion, that is correct. So that is where you should be as a trader. Wins or losses should not create intense emotional changes, and that is very boring. And that is why trading is actually, trading correctly actually is quite boring. This month, it's been a fantastic month for me. There has not been a single day that the dollar amount has excited me, and it's not changing my life. However, where the excitement needs to come from is the execution and the accuracy that you see and the advancement that you see in your trading. So I get excited more than ever when I am correct in my reads, when I really am accurate, when I call something perfectly. That excites me. Now, the money really doesn't. And so that is where you want to be, right? So that's not a bad thing. And that's something that I would continue to try to stay with, right? That's something that I would continue to try to achieve is my wins and my losses are boring. They're not going to change my life. I'm consistent, and I'm going to consistently try to stack, you know, these comfortable wins, and I'm going to continue to try to increase my accuracy and find joy with my ability and my education and my expertise that I'm building, right? That should be like what motivates you and drives you. Is like, wow, I really know how to do this. I really can call the markets. I really can read price action. And what should excite you is how much limitless opportunity is at your fingertips if you continue to do it, and you maybe continue to scale up over time, right? So maybe you become so good that you're like, okay, now I can start to scale up, and maybe those dollar amounts start to get a little bit more exciting. Now, the second part of this is that the current market conditions are absolutely causing a lot of people to not be excited about trading as a whole, right? Like, trading as a whole is not as fun as it used to be when you have markets going sideways, right? I have not felt what it is like to see NVIDIA or Apple or, you know, some individual equities go straight up all day. Like, that's fun, you know, like seeing Tesla go up 10%. Like, there's been days where Tesla go up 10% in the past. and you're like, oh my God, look at this move, right? And how that excitement that you feel that the NASDAQ's up 4%, like, whoa, what a move, like, and then you're talking about it with your friends. Like, did you see the NASDAQ today? That was crazy, right? All those, conversations that we love to have. That's at the core of it, is what we love as traders. We love having those conversations. We love seeing the market do crazy things. We love seeing big moves. We love, feeling the possibilities that are out there. And that happens when markets are risk on, right? And in trends and are exciting. And, you're making, you're seeing moves, options move thousands of percents, and all these crazy things are occurring. That makes you, get back and wake up and, jump out of bed in the morning and say, I'm ready to go. Let's get some more action, right? Market's hot. So I'm going to, get excited to step up again. You're not getting that. That's not happening. And so this is a situation where you see the truth of current, you see the truth of moments in time on the market where trading is a little bit slower. Markets are ranging, and this is survival time that a lot of people are probably going to just lose all their money in. So for you, John, to be in your current situation where you're just sort of break even, not really having much fun, but you're staying alive, you're doing the right thing. I mean, you are doing exactly what you should be doing. I guess you could say boring, frustrating. I'd say a little bit more frustrating, which you could sort of say boring too. But yeah, I'd say markets are maybe a little bit more frustrating now than they were in the past, which leads to maybe you not trading, which then leads to boredom, right? It all sort of mixes in together. So current conditions absolutely are causing a little bit more frustration, a little bit more boredom, a little bit more hands-off. It's warranting less trades. It's warranting less risk. It's warranting less aggression. And the truth of it, we love aggression. We love putting on risk. We love trading. We love the action of doing these things. That's what gets our blood, flowing in the morning. And that's what makes this fun, right? But when we know that we should be more hands off and take less trades and do less of the thing that we love to do, that's your side effect, right there. That's why you're feeling the way you are. It's temporary, John. It's temporary. It's not going to last forever. I can guarantee you that. How long it lasts, I don't know, but I can guarantee you that at some point in the future, we're going to have a market that finds its direction. You're going to get back excited to trading. And I think during these markets, during these moments, I think it is fantastic of you to stay bored, stay, comfortable with your risk. Don't try to have fun and try to push things when the market is not warranting the push, right? That's when you lose. And that's when boredom turns into hatred and disbelief and, giving up, right? So bored is good. Don't think bored's bad. I think you wait around. I think you continue to stay break even, continue to find your little trades here and there, which maybe you find some small profitability. And when that market heats up, which I'm sure you will know, and if you're part of the group, then you're going to know, and I'll be very vocal about when I think markets are heating up for us to get aggressive again. I think, I think that would be my answer to that. Is that answer your question there?
Oh, yeah, absolutely. I just wanted to make sure that, other guys have been through this, and I'm not the only one. That's all.
No, you're definitely not the only one. And I would say, John, that this is the most sideways market that I have ever experienced, by the way. I've been trading for 10 years, and I can probably remember, I probably don't remember much my first four. I was, pretty long time ago. I don't think I can remember exactly what the market was doing, but I can remember pretty well the last 5 years, and I don't remember a time over the last 5 years that we have stayed range bound for now almost 4 months. It's not something that I've seen. It's not something that you see very often, and you're definitely not alone, my friend. That's for sure.
Well, I appreciate you, Vince.
All right, man. Appreciate you calling in.
All righty.
Have a great night.
God bless you all.
See ya. Yeah, it's definitely something going on lately. It's not as sexy as it once was. And I think if you guys are in survival mode, if I think your goal right now is to just stay break even, maybe make a little bit of profit, right? But nothing here is like, wow, Desi, that's a sick day, right? Whoa, man, like what a crazy day. 2,000, 1,200, 1,200, 1,100, right? What makes me more happy here is just how consistent these numbers are. Uh-oh. There we go. We're back. Right? The consistency. The consistency makes me happy. It keeps me sane. I wish these numbers said 10K, right? And 10K and 10K, right? And 20K, right? I wish that was what that case was, but I just know that I can't be putting on that kind of risk right now. And that's it, man. I mean, we just got to live with that. Be happy with where you're at. Be happy with consistency. Be happy that you're staying alive in sideways, very volatile and choppy markets, and live to fight another day, right? Live to fight another day. Live to fight in a uptrending or downtrending market that's providing sexy opportunities. It will come again. It will come again. I can tell you the real reason why market is sideways is because I started trading. Hey, you know what? You know what I tell people that just started trading? You know what I tell people that just started trading in this market environment? It is that you are learning in the most difficult situation, and you are going to become a great trader because of it. If you can learn to survive during current conditions, you are going to do just fine, my friend. The actually opposite is to start trading when everything's going straight up, and then all you learn is how to long things. That's when you actually usually end up losing everything. So if you're learning to be cautious in current situations, I think you are learning great things that will help you long term. All right. I think that is a wrap on today's Trader Hotline. I dumped a bunch into market October 7th, the exact day that the market topped. Turkey Tom, guess what? I bought my entire long-term at the high of the market in November of right here. Let me go ahead and pull it up. I bought my entire long-term portfolio right here. And you guys that have been around the Options Insider and the Desi Trade brand for quite some time, you remember I started buying long-term shares right here. It was the high of the market in 2021, and we went down for the whole year. And you know what? That was a blessing in disguise, because all I did that entire year was dip buy and slowly dollar cost average into my long-term portfolio. And guess where we are today, right? So who cares if you bought stocks at highs? If you're actually in it for the long term and you're dollar cost averaging correctly and you're not over leveraging, then you just slowly leverage in over time. I mean, I'm telling you, I bought every single Monday this entire year, little by little, little by little. I no longer have it in M1 margin, but I know you know that, right? That's where we did it all in M1. But yeah, I don't think that's a terrible thing, man. Obviously, it depends on how much you put in and how much risk you put on at that moment. But all right, guys. Well, I appreciate you coming to Trader Hotline. I appreciate you being here. We got 3 callers in today. Some good conversations. Good 3 questions today. We talked about adjusting to market conditions. We talked about adjusting key levels. Right. We talked about current conditions and how they can cause some boredom and frustration, the mental and psychological side of it. So I think great 3 questions. And I hope that you guys were able to take away something useful today. I hope you enjoyed our show. Again, make sure you call in every Monday, 239-372-9990 to Trader Hotline. Make sure to check out the Insider's Coffee Code down below in the description, and make sure to subscribe to our channel. Trying to get to 2,000 subscribers on this channel. I'd appreciate your guys' help. And that's going to be it. Why did I close it, margin? I moved it into a private bank, man. Just easier management. Hope you guys have a fantastic rest of your night. Thanks again for showing up. And I will see you, I hope to see you, on the live stream tomorrow morning. Peace and love.